They just keep printing bad money, and it eventually crowds out the good money. Bitcoin is going to do reverse Gresham's law. The good money will eventually crowd out all the bad money. In a world where the bunch of old white guys decide what the interest rate is, that's not a free market. That's market manipulation. You get a persistent theft of real wealth from the masses to the few.
They're all bending the knee. Vanguard capitulated. JP Morgan's doing tokenization. Citibank's talking about custody and launching its own stablecoin. Are we seeing the full capitulation here?
Yes, but
This episode is brought to you by Trezor. Trezor makes beautifully crafted hardware wallets that allow you to easily and safely store your crypto assets. Trezor's been in the game for a very long time. Since 2013, they were the pioneers of hardware wallets and the seed phrase setup, and their hardware wallets are open source. In fact, my favorite is the Trezor Safe 5. It's a beautifully designed and easy to use hardware wallet, guys, and it's my go-to. And they support a variety of coins. All your top crypto tokens, your Bitcoins, your XRP, Ethereum, Solana, and much more. And even new coins, even BlackRock's BUIDL token. So they support coins on the institutional side where you have tokenization of different assets and much more. And they even offer a great service that helps you to get your Trezor device set up. You get one-on-one customer support from their team. So you can check that out as well. So once again, I'm a big fan of this hardware wallet. So if you'd like to learn more, visit the link in the description. Hey folks, welcome into the Thinking Crypto podcast. I'm your host, Tony Edward, and joining me today is Mark Yusko, who is the founder, CEO, and CIO of Morgan Creek Capital Management. Mark, great to see you.
Great to see you. Great to be with you. It's been a little too long, so great to catch up again. And hope you had a good summer. Now that fall is fully engaged, football season, and although I was going to say colder weather, but it's going to be 81 degrees here in Chapel Hill today, so no cold weather yet.
Yeah, it's 83 here in New Jersey, so can't complain. And
Wow.
Bitcoin hitting new all-time highs. Mark, I figured I got to get you on to get your perspective on everything that's happening. You know, what are your thoughts on Bitcoin hitting this new all-time high and then the outlook for Q4?
I mean, look, there's an inevitability about Bitcoin's price in dollars or yen or euros or whatever you want to price it in rising as countries devalue their fiat currency. And the more they devalue, the higher the price. You know, it's funny. Most of us talk about Bitcoin in dollars. That's our kind of reference point. But like if you looked at Bitcoin in lira, it's been making all-time highs for years because the lira has literally devalued 99.9%. Same thing in Venezuela. So there is this, I call it home market myopia, where one, you think all the smart people are in your home market, which is clearly not true. Two, you think you dominate every market. Like, all the stocks are traded in the United States. Well, that's not actually true. I mean, some of our stocks now are crazy valuations, so they dwarf, NVIDIA dwarfs the entire Japanese market in the MSCI World Index. I mean, and Spain and France. And so that can definitely happen. But in digital assets, I think it's interesting. You got our president saying, "Oh, we want to be the crypto capital of the world," and then the Bitcoiners are like, "No, we want to be the Bitcoin capital of the world." Okay, fine, but neither one's going to happen, right? We're 20% of global activity. Binance is orders of magnitude bigger than Coinbase. As great as Coinbase is, and as great as Kraken and Gemini and these other exchanges are, Binance runs circles around them on a global basis. So, Tether is this gigantic beast of a company. We're all excited about Circle, right? Circle goes public. Great. Goes up to $40 billion market cap. Fantastic. Excited for Jeremy and the crew. But I heard a stat that Tether makes more every 4 days than Circle will make in a year.
Wow.
So what's that worth? Now they're trying to raise money, I heard, at a $500 billion valuation, which would make it the second largest bank by market cap in the world behind JP Morgan. Pretty impressive for a company with like 50 employees. So that's a rambling kind of strange answer to your question about how to feel about the all-time high, but it is a high, right? I mean, 126 yesterday is higher than we've ever been. But when you inflation adjust and you look at it relative to how much devaluation has occurred and how much M2 has been created and actually what gold prices have done, we're actually not at a high. Now, I think we'll get there.
Sure.
And then the big question on everybody's mind, and yesterday was interesting, October 6th, we're recording on the 7th. October 6th is interesting in that if you look at the previous two cycles, the 17 cycle and the 21 cycle and now the 25 cycle, if you look at 17 and the 21, the time from cycle peak to low is 364 days in both of them, precisely. And then the time from cycle low to cycle high is 1,064 days. And so 1,064 days from the previous low was yesterday.
Mm.
And what's crazy is there's a guy, and I wish I could remember his name so I could give him credit, but I saw there's this guy that tweeted in 2023, 2 years ago, that the simulation will be repeated and the new high will occur on October 6th, and then we head back down.
That's pretty wild.
Wow. Now, there are a whole bunch of people who are like, no, 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 we're going to the moon by the end of the year. I mean, maybe. So anyway, lots of stuff to talk about.
But Mark, is your base case still, and I think you alluded to it, the currency devaluation that's happening around the globe by central banks, that's driving asset prices higher? Because as you mentioned, gold is ripping, you got real estate ripping, even though the mortgage industry is like flatline, and then you have
Unbelievable.
the stock market going nuts. So are all these assets moving with the liquidity from around the globe?
100%. Look, liquidity drives markets. One of my favorite things to tweet. And at the end of the day, this is money illusion.
Hmm.
Right? Stocks are not at all-time highs, right? I mean, yes, nominally they are, and you can't debate that, but in real terms, meaning if you price them in anything other than, the toilet paper, which is the US dollar, or the yen or the euro, which are going to race to the bottom to devalue, if you priced it in anything solid, pun intended, like gold, here's the crazy stat. Stocks are down since 1900 priced in gold.
Wow.
Actually not up. Now, you say, but that doesn't count. I'm like, well, it kind of does. And look, most of us don't feel it when things are more expensive. Our rent is higher. The price of a hamburger is higher. You're up in New York, New Jersey. There's this place in downtown New York where they only take cash and there's a huge line and you get the privilege of paying $30 for a hamburger. And I went once with one of my guys and it was a perfectly fine hamburger, but it wasn't like 20 times better, or 10 times better than the other hamburgers I've had. In
Sure.
fact, I probably prefer Shake Shack's hamburger over that. But that illusion is what's happening when inflation, right, which robs us of our wealth. And for most of our existence up until 2009, there was no alternative, right? You lived in the fiat world. Everyone lived. We lived in the fiat world. We earned dollars. We tried to save dollars. But the problem was in saving dollars, if we didn't put them at risk, like if we just put them in cash, then every day they're stealing a little bit back through this thing called inflation. And what's really funny about inflation is the normal state of a productive, innovative society is deflation, not inflation.
Mm.
What do I mean? When you think about it, if you innovate, then you make things better, right? You're getting more for the same amount. That's deflation. Or cheaper, right? You can produce more, like the Model T Ford. We discovered the assembly line, and so cars started to go down in price. And from 1776, when we started as a republic, till 1913, There was no such thing as inflation. We had a persistent deflation. Now, it was interrupted by a couple big wars and a depression, like the depression of 18 it was like 1848 or something like that, was worse than the Great Depression, but no one ever talks about it because it's too long ago to remember. So in 1913, the Fed was created. And what does the Fed do? Well, the Fed artificially manipulates markets. So free markets are prone to deflation because if I can compete, let's say there's some provider of a good or service. If I'm in a free market and I can compete against that person, I'm going to try to win business by maybe underpricing or making something better, both deflationary. Well, if the market's not free, right? If there are barriers or tariffs or restrictions or regulations, then you tend toward inflation. Well, if you manipulate the price of money, meaning in a free market, people would bid openly on the acceptable return that they would take for safety, right? Someone say, well, I need 6%. Someone else say, well, I need 5.5. I need 5. I need 4.5. And there's a natural market clearing price for risk assets. Well, in a world where a bunch of old white guys, I hate to say it, but a bunch of old white guys decide what the interest rate is, that's not a free market. That's market manipulation. And so in that environment, you get a persistent theft, and I use the word intentionally, of real wealth from the masses to the few. So income and wealth ownership, that divide becomes greater and greater and greater. And today it's the highest it's ever been in history. And I think it's interesting. Like I understand why the people in the club, right? They say it's a small club and you ain't in it, right? I understand why the people in the club want that. What I don't really understand is why the rest of us don't pick up the pitchforks, literally, at some point and say, no, no mas. Like, we want open and free markets. We don't want this manipulated market. Inflation, like, who convinced an entire population of people that taking half of my purchasing power every 30 years is a good thing? That makes no sense, right? I mean, I worked hard for that money. And, Jimmy Song, I'm sure you probably even had him on the podcast, but Jimmy in the cowboy hat. And Jimmy made an impression on me. I heard him speak, kind of around the same time we met back in 2018, maybe it was 2017. And he said something very profound that, people get really agitated when I say it, but it's like, he said, look, if you work for a salary, you're a slave. Everybody went, oh, you can't use that word. That's a bad word. It's like, no, think about it. You're a slave, right? You get paid, you put your money in savings, and then they take it back from you if you don't spend it through this stealth tax called inflation. Well, if you work and get paid in Bitcoin, you're no longer a slave because your money actually appreciates. Now, here's the thing. Bitcoin doesn't change. One Bitcoin. The Bitcoin we talked about 7 years ago and the Bitcoin today, it's the same thing. It's one Bitcoin. The amount of dollars you need from 16,000 to 126,000, that's different, but it's still the same Bitcoin. So what changed was the money got worse, not Bitcoin getting better. Now, Bitcoin did get better. It's got better hash rate. It's got more decentralization. It actually is better. The network is better. And that's why the value of it increases. But at the end of the day, it's the fiat that went down in value. And what's interesting about saving in Bitcoin versus saving in fiat, if you save in Bitcoin, and again, I'll give Jimmy full credit for this, he says you actually unleash the most powerful force in all of human history, which is human creativity. Because if you don't have to constantly be working and striving to preserve the purchasing power of your money, and your money actually grows, you have some time to think, to create, to maybe start a new business, right? Maybe build a new product. You don't have to just do this slave labor and get paid in this depreciating asset. So again, long answer to an interesting question, but to me, it all kind of weaves together in that why Bitcoin is such an important innovation, why the construct of money is changing. In it, look, money is a very unique thing. It's an asset that exists in the absence of a liability, right? That's what money is. And that basically the only thing that meets that criteria that is used is gold. Silver meets that criteria, copper, puka shells. There are a lot of things that would meet that. But the only one that's been used for 5,000 years, roughly, because of belief and custom, is gold. But gold, we've talked about this before. Gold suffers from two problems. It's not very portable, meaning it's really heavy and you can't like stuff it in your pocket, a gold bar, and walk through.
Right.
Actually, you can walk through the radar detector. I mean, the metal detector because it's inert. But anyway, so gold isn't very portable and it's not very divisible. Like if I had a bar
Yeah.
and I wanted to break it in half, I'm not strong enough. And even if I could break it in half, I couldn't stuff it in the computer and send it to you. All the Bitcoin in the world fits right here. Now, I don't have any on my phone. Don't SIM swap me. It's not worth it. I keep mine in cold storage. In fact, I'm wearing my Chili Willy socks today for Bitcoin cold storage. The point is that it's also very divisible. I can send you 1/100 millionth of a Bitcoin, right? That's a one Satoshi. I can send you one Satoshi for free, and that's better than the current system. So it is this technological improvement that takes old money, right? 5,000-year money into new age money for the next 5,000 years. But everyone says, but that's not money. Money is dollars and yen and euros. Like, no, those aren't money. Those are currency.
Yeah.
And, JP Morgan said it, right? Gold is money. Everything else is just credit because they're backed by debt. And Saylor, came and said, well, no, Bitcoin is money. Everything else. Okay, great. But it's true, right? Everything else is credit. Everything else is debt. Everything else lives in a world where governments can print it. Now, in the old days, you literally had to printing press it and cut the paper and fold them up and hand them out.
Mm.
Now you just push a button
Yeah.
and you create more ones and zeros. Well, that's just too easy. There's no proof of work, right?
Right.
Which is, one of the great innovations of Bitcoin. But anyway, I digress.
So on that note, Mark, we see that the United States has established a strategic Bitcoin reserve. They're using the Bitcoin they confiscated from bad actors over the years. But what's being discussed right now is how can they use revenue neutral ways to buy Bitcoin to add to that
Yep.
reserve. So whether it's selling some of the gold reserve or using the tariff revenue, what are your thoughts on that and how that might play out?
So one caveat, right? We actually don't have the strategic Bitcoin reserve, which would be awesome if we did. What we have is the stockpile, the digital asset stockpile. Now, why is there a difference? That's the distinction without a difference. Well, it's because Senator Lummis and a couple others were trying to get this strategic Bitcoin reserve to get the government to buy 200,000 Bitcoin every year for the next 5 years. And it makes perfect sense, right? If you are a central bank and you have the money layer, right? The way the money layer works is the central banks own gold. Sometimes they own other stuff, like the Swiss central bank. I shouldn't say this, but isn't a real country. No, I'm just kidding around. I mean, they don't make stuff. I mean, it's just like it's a neutral place where you hide your money in Swiss banks. So that's what it is. But their central bank owns stocks and stuff because it's not a real central bank. It's like a private company that wants to make money. So they buy stocks. But real central banks like, the Central Bank of the US or the Central Bank of China or the Central Bank of Europe, although that one's less real, they buy gold. And sometimes they buy euros or yen or dollars or whatever, but mostly they buy gold. Well, that's the base layer of money. Then they issue debt to create, their paper currency out of thin air. That's called fiat. So in that environment, we should think about replacing gold with Bitcoin. Makes
Completely
perfect sense.
or partially?
I mean, I could go all the way. I mean, I don't need to go all the way. I mean, they can coexist, but for me, I'd transition. I mean, again, I have nothing against gold. It's it just isn't as good as Bitcoin.
Sure.
So, and it doesn't mean gold is bad, but just like gold beats silver. Remember in the early days, 1900s, 1920s, you had things called silver certificates. Like if you had a piece of paper money, it wasn't like today where it says, "In God we trust," and it's worth nothing. Like if you gave that to the government, they give you nothing, right? You don't get gold, you don't get silver, you don't get tax receipts, you don't get anything. You don't get tariff revenue, you get nothing. It is just a piece of paper to settle debts between private or, public borrowers. So it has no value. But in the old days, it was backed by silver. Like every dollar you printed had to have gold or silver in the vault that if someone surrendered that money to you, you had to give them the hard asset. That went out the window in 1933 and then again in 1971. But gold nudged out silver, and silver nudged out bronze, and bronze nudged out puka shells or stone wheels or whatever it was in the early days, thousands of years ago. Because people have always wanted a medium of exchange, right? Let's say you grow chickens and I grow cows. Carrying our cows and chickens around with us all the time so we can barter, that's a pain in the ass. So let's have, you would print little tokens with chickens on them and I'd print little tokens with cows on them and we'd exchange those. But then, well, how do we know how much a chicken token is worth versus a cow token? Sounds like now, right? Everyone prints their own token. So it didn't really work. So then they said, well, let's have one token and let's call it, and the first one in China was called flying money because literally it was made of paper. And it's actually more linen, but it would fly away in the wind, right? Because it wasn't like, gold that would not fly away. That was the first one, and then the Dutch came along with the dollar, and then we've copied that, and we made the dollar. So we have these things that we create them out of thin air, and gold would be better than those as a store of value, but Bitcoin is better than that. So to me, it's logical and natural that all nation states should migrate to Bitcoin. Not tomorrow, but over time. That makes sense to me. Murray Stahl, who's right up there, your neck of the woods, runs Horizon Kinetics. You used to have him on the show sometime. He explains this way better than I do. How normally in the world there's something called Gresham's law, where bad money crowds out good, and we've seen all the stories: Venezuela, Turkey, Zimbabwe. I have over there on my desk a 100 trillion Zimbabwe dollar bill.
Wow.
Right? And it wouldn't buy a loaf of bread, right? 100 trillion. And they just keep printing bad money and it eventually crowds out the good money and the country goes down the toilet. So that's Gresham's law. Well, Murray describes Bitcoin is going to do reverse Gresham's law. The good money will eventually crowd out all the bad money. And even though gold is money and it's good money, Bitcoin should even crowd that out. So in the short term, I probably have a little bit of both, but over long term, it's Bitcoin. Governments like fiat because governments are run by a small number of individuals, right? Congressmen, senators, politicians, presidents, vice presidents, pretty small group. Those people, when they come to power, they're usually not very rich. Occasionally, someone's already rich, but most of them actually aren't very rich. They're doing as public servant. By the end, they're super rich.
Yeah.
How does that happen? Like if you get paid 100 grand and you got to pay your bills, you're not going to get rich that way. So you must be getting rich some other way. Well, it's the payola for this project or hey, let's just print money and allocate it back to ourselves. Like, hey, I know, we'll allow ourselves to buy companies before either the government buys them or some big announcement happens because, it's just the committee and we're on the FDA and we know that something's going to get approved. So we'll just buy the stock and it'll go up. That sucks, but because most people can't do that. And in fact, if you do that in the normal world, you go to jail. You do it as a politician, as Ms. Pelosi said, oh, it's just part of my compensation. Like hell to the no. But all of that is to say, the system is what the system is, and governments really like fiat. So they're going to fight the adoption, which is why we don't have a strategic Bitcoin reserve. It's like why we don't have the Epstein files. Well, why is that? Well, because the people in office are in the files. I mean, so they're not going to release them. I mean, and look, I don't really care about all that stuff, but it is just kind of comical. It's like, why won't you release these things? Are you joking? Right? Because self-incrimination. I don't have to do that. So, and it doesn't, I mean, the last guy was in them and the guy before that and the gal before that. I mean, they're all in it. So this group of people, they like making themselves wealthy, and fiat helps that. Whereas a Bitcoin standard, to quote Saifedean, would not promote that. And so I understand why there's reticence. I understand why, Senator Lummis is great. And she's up there and she's talking about it, and they're like patting her on the head, saying, like Cindy Lou Who, right? Sending her off to bed with her glass of milk. The Grinch is like, no, I'm not going to do that because that hurts my ability to keep getting rich. At the end of the day, how would that ever change? Well, term limits. Maybe you go back to the old system where you came for 2 years and then you went back to your farm. Maybe 2 years is too short, but maybe 4, maybe 6. But lifelong politicians, bad.
Could it be
So,
generational where, for example, not to be an ageist or anything, but the boomer crowd.
oh, you can be an ageist. I'm a boomer, and look, the boomers are geniuses, and I don't mean that just because I'm one, but they are geniuses, right? Because what did boomers do? They created something called entitlements. What's an entitlement? An entitlement is a promise you make to yourself that you don't fund and you ask other people to pay for. Who wouldn't vote for that? Who wouldn't sign up for that? So what did we do? We created a system that rewards debt, real estate ownership, stock ownership,
Yeah.
and it makes promises to pay us, old people, right? So every day in this country, 10,000 people turn 65, and they start to become eligible to receive these benefits. Well, that created the inflation that led to housing prices being now unaffordable for the average person,
Yep.
right? Particularly a young person. Okay, so I can't buy a house. It's like, the White House picket fence, having kids. Now, this is bullshit, but they tell you it's too expensive. It's not. It's just not. I mean, yes, it's expensive and yes, it's hard, but doing stuff that's hard is good. And it's the best thing you could ever do. But some people are having less kids and they're not buying the houses. And so they're like, well, I found my way out. I can just own Bitcoin. And it's actually not the craziest thing, because what Bitcoin does is it's like an antimatter machine. It sucks up all of the grift and the graft and corruption, and it energizes it, and it grows. Again, Bitcoin itself doesn't grow, but the number it's there's that great picture. It's a big triangle like this, and it's green. Then there's a little triangle at the bottom, which is Bitcoin. So this is fiat, and it's literally like a funnel. And eventually, all that capital that's been created out of thin air, it just keeps pressing down into Bitcoin, and that Bitcoin triangle is going to keep growing. So you're right. There is this generation gap. I mean, I joke all the time. My youngest granddaughter, is 3. She'll never have one of these, right? She'll never have a leather wallet. She'll never have paper money. She won't even know what paper money is. She'll laugh at the idea. You picked up a dirty thing and you handed it to somebody? No, it's silly. Just tap your wallet. So, but the point there is that the system is set up to, as you absolutely identified, to take advantage of this digital divide, right? Ask anyone over 35, who's your broker? I don't know, Merrill Lynch, UBS, why? How much gold do you have? I don't know, 3-4%. How much Bitcoin do you have? Oh, 0. Oh my God, are you kidding me? That's a Ponzi scheme. Haven't you heard of that Peter Schiff guy? Ask anyone under 35, who's your broker? What's a broker? I got a Robinhood account.
Yeah.
All right, how much gold do you have? Oh my God, zero. Boomer rocks? Are you kidding me? Haven't you heard that Peter Schiff guy? How much Bitcoin do you have? Don't want to talk about it. Why not? Because it's a really big piece of my net worth, and I'm kind of embarrassed by it. So, not embarrassed in a bad way, but I really don't want to tell you. So that digital divide is real. And look, 39 trillion. It's a big number. 39 trillion. Remember, 1 trillion is a dollar every second for 31,710 years. So 39 of those babies owned by me and my brother and sister, and all us boomers. It's all going to y'all, right? We're all going to die. Hopefully not soon, but we're all going to die. And all that money is going to get left to the next gen. And those people aren't going to leave it in brokerage accounts. They're not going to leave it in gold and real estate. They're going to live in a digital world. And what's really crazy is that next generation. So you got the boomers, and then you got Gen X and Gen Y, then you got Gen Z and Gen A. And the Z and the A, my I got two older sons who are Gen Ys. Older son and daughter. Get this right. So a son and daughter who are Gen Ys. And then I got a Gen Z little baby. And then I got my grandkids who are Gen As. And so my Zoomer son is just never, ever, ever. My older kids, the Gen Ys, they have brokerage accounts. They have fiat accounts. My Zoomer son and my Alpha grandkids, they're just not. And that's okay. And that's good. And that's progress. And that's innovation. And at the end of the day, what does this mean for Bitcoin? Well, it means Bitcoin's going to continue to rise. The big question, the question on everybody's mind, was yesterday the cycle peak?
Mm.
Or is the cycle obliterated and there's no more cycle because there's so much demand from institutions and sovereigns and maybe everyone's going to get this cheap Bitcoin reserve? I'm on record saying I don't think October 6th is the peak. My calculations gave me end of October, beginning of November. And the way I get to that is 17 was December 18th, 21 was November 21st, both coincidentally correlating to days when the CME announced futures projects, which would allow the big uglies to go naked short to push the price down. Is there a date in late October where the CME is going to make an announcement? And the CME did make an announcement last week, but I think they said it's coming in 26, but I have to get my details on it. But they said they're going to go to 24/7, 365 digital asset futures. That's a bad thing. Be careful what you ask for. You might get it. We don't want more paper. We want more real. We want more Bitcoin, not futures Bitcoin. Because when commodities can be created out of thin air, then prices tend to get spoofed, whether it's gold. Now, when they finally break out, gold was stuck for a long time, from like 2011 until recently this year. And now, boom, it finally goes up because the people who were spoofing got overwhelmed by the demand. And it's mostly safe haven demand from places like China and India and places where, people are waking up to, hey, fiat is really not a good thing. I'm on record saying I thought this cycle would go through late October, early November, that by my numbers, I think I said this in February, we'd hit 175-ish would be this cycle peak. Now, why that? Well, fair value, we can determine, right? Metcalfe's law model, Tim Peterson does it, easy. 105, 110, somewhere around there. Maybe it's a little higher now, 115. Fair value. In previous cycles, we got to 2 times fair value. Fair value was 10,000 in 17. We got to 20. Fair value was 33,000 in 2021, we got to 69. So 2 times fair value. Why? Leverage. Too much leverage, too many people doing stupid stuff, Bitfinex and, all kinds of crazy bad actors, giving people 100 to 1 leverage and pumping the price. I think those days are gone. But doesn't mean there's no leverage, but I think the crazy, crazy leverage is gone. And, I hear you can get 50x in the perps market now, but whatever. It's less than there was. So I said we'd go to 1.5 times fair value. So let's say fair value was 115. It gives us another, 55. That's like 170. And that's kind of where I come out. Now, if you look at the power law curve, which has been super accurate for a very long time, it's saying we hit 200 like first week in November, second week in November, maybe it's, I don't know, sometime around maybe it's even Thanksgiving. They've been really, really accurate, so I wouldn't argue with them. So is it possible in the next 30 to 60 days we have a short squeeze, big bull market? Definitely possible. Is it
Okay.
possible that this guy was right 2 years ago, that the simulation's already been written and yesterday was the peak and now we're in, the beginnings of crypto winter? The only thing that makes me think it is definitely possible is the relative strength yesterday was 74. Anytime you're above 70,
Overbought.
that's been a temporal peak.
Mm.
Again, doesn't necessarily mean you have to have a crash, but it usually means you can't go much higher. Our first fund, which we launched back when we met in 2018, um, is now getting towards the end of its life. And we bought Bitcoin early. We started buying, we waited, so we raised the fund in 2018. The market was crashing. And we're like, geez, we can't buy this stuff now. And on good on us. Now we didn't buy it on the day, like December 7th. I remember the day, because it's a big day. I was on TV and it was CNBC. And the woman host says, yeah, look how bad Bitcoin is. It's, 3,200 and, it's going to zero. And I said, look, Bitcoin will outperform stocks next year and for the next 10 years. In fact, I'm so confident of that. Pomp and Jason and I just issued yesterday, and I had actually called Warren Buffett, literally. Someone told me if he call his private number, he will pick up the phone if you call after 5 o'clock. And I did, and he did, and we had a nice conversation. And I said, hey, you made this hedge fund bet. Would you like to make a bet? You take the S&P, we'll take uh, Bitcoin. He said, well, let me talk to my guys and I'll come back to you. So he came back to me and he said, they tell me I'm too old to make that bet. I'm like, look, you're going to be chasing my sorry ass around when you're 100 years old. So you're fine. But he didn't take the bet. But so we made it on television, said anyone who wants to take S&P, $1 million charity bet, just like the Buffett thing. And you both fund half and you put it in bonds. And then you see, charity gets it. It's not for me. Long story short, no one would take it. We had one guy said, all right, yeah, I'll take it. And his son said, Dad, are you out of your freaking mind? No, we're not doing that. I mean, we have no upside. If we win, we're supposed to win. If we lose, we look like idiots. So no, we're not doing it, which is kind of funny. So no one would take our bet. Now, it's a good thing because Bitcoin has kicked the crap, technical term, out of the S&P since 2018. But we did start buying first quarter 19. So our average cost is, less than 5K. And so we're literally in the process of determining when will we distribute that to LPs.
Mm.
And so it's probably, well, we know it'll be in fourth quarter, just don't know exactly when.
So, Mark, you mentioned earlier that there's less leverage. There is still leverage, but there's less. And then you have the ETFs sucking up Bitcoin like a massive vacuum,
Oh,
a black
yeah.
hole. And then you have digital asset treasury companies buying. I know you're invested in Metaplanet.
Yep.
So, do you feel the downturn in the bear market is going to be less? It's going to be less volatile?
Oh, thank you. Very important. So there is an argument that says, well, we're not going to have a cycle this time because of all the things you said, all the new institutional demand. But the level of the bear market, I believe, will absolutely be less because, like right now, if 125 yesterday was 126 was the peak, the bear market is going to be like 15 or 20%. I mean, because we're not that high above fair value.
Sure.
If we got to 175 or, 200 and we're 50% above, the bear market might be 55, 60%, but it's probably not going to be 75 or 84% like the first couple. So to me, a correction, again, humans are going to human, we push things up too high, like AI stocks right now, or quantum computing stocks right now, or nuclear stocks. I mean, we pushed them to levels that don't make any sense, and they will correct. Now, some of them, like the quantum stock, they might go down 99%. I mean, I don't know. But if we peak, if yesterday was the peak, we might never go below 100K again, right? Because there's just no downside pressure. We might just kind of fluctuate like this for a while, and then this fair value will keep accreting at 5-6% a year as they devalue currency, and we just have this nice, steady, boring asset.
Mm.
If we have a blow off top between now and Thanksgiving, yeah, we'll have a correction, and my guess is the correction is always proportional to how far you are away from fair value.
Sure.
So if you're 50%, if you're 100% above fair value, you got to drop at least 50, but then you normally go another 50 of that 50. So that's another 25. So you get down 75. Now, if you're really super crazy, like, the US stock market in 2000,
Mm.
you go down 84%. Bitcoin in 2017, you go down 84%. Bitcoin in 2021, you go down 74%. So if you get crazy, crazy, then your drop is bigger.
Well, but Mark, doesn't it feel like it's already, and Bitcoin aside, it feels like the stock market's a bit crazy. It feels like gold, real estate. It seems like we're in an everything bubble, and I don't know. I get this feeling
But we
like we're
aren't in
gonna have a
everything
big
bubble. It's an
collapse.
absolutely great point, and
Mm.
it's illogical, right? Normally, your safe havens do well, and your growth assets do poorly, or your value assets do poorly, and your growth assets do well. Or fixed income does well and equities do poorly, or bonds do poorly and everything's because that's money illusion.
Mm.
That is currency devaluation. That's different than, look, if a company's earning more money, they generate money and they return dividends to shareholders. That's real economic value creation. If we're doing crazy stuff like this silly circular stuff that we're doing where, okay, I'll tell everyone I'm going to buy all your chips if you promise to buy, capacity from this company that I own a little piece of that will I'll like, well, but someone has to pay the money. Like there's one yesterday with AMD. It's like, well, just give us the chips, but you have to pay us for them. Oh, no, 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 no. You give us stock too, but then your stock price will go up and then you can sell. Oh no, that's it. Then we'll sell the stock that we got from you for free and then we'll pay you. Are you serious? And it worked. So we live in this weird world where liquidity is big, but free float is small because so much money is locked in passive. And look, a passive S&P can't think. It's a dumb strategy, meaning rules-based. So if NVIDIA has a market cap of 4 trillion and it's 7% of the index, every day that money goes in, you must buy 7%. You don't get to say, geez, at 30 times sales, that's probably a bad buy. I don't want to do that. You don't get to do that. It's an index. So much money is locked and can't do anything except what it's told to do by the rules. The amount that's actually free floating is small. So if anyone tries to short based on the crazy valuation, they just get squeezed. And look, Tesla's been doing this for years. I mean, when you have low free float and lots of the asset locked, you can manipulate the price. It's like Dogecoin, right? Dogecoin, quote unquote, has this multi-billion-dollar market cap. Really? Well, let's think about this. If Elon sold one Doge, how far would the price fall? If he tried to sell 5% of what he owns, how far would the price fall? If Mark Cuban sold 10% of what he owns, how far would the price fall? So market cap, particularly in crypto, is just a dumb idea, right? To say that like XRP, ridiculous, right? You got all this stuff owned by Brad and the foundation, and then you got the army trading the shares back and forth to try to get 286 or 289. If the foundation actually sold all those coins, the price would basically go to zero. The feed the duck thing, okay, great, but that's a winding answer to how bad is the market right now. The market is it's the worst ever. Like 2000 was bad, and I lived through it, and we actually got very short it. Now we were early, euphemism for wrong. So our 1999 technical term sucked. But man, from 2000 to 2002, when the rest of the world was down 40% and the average endowment was down 25, we were flat. Now, flat isn't awesome. Like, I shouldn't break my arm, pat myself on the back for flat, but flat, sure better than down 25 or down 40. And again, it wasn't us being geniuses. It was that people like Viking and Tiger Global and all, or Tiger Tech back then, were short these things. And there's one funny story. So, we got short subprime. So we put 10% of client assets short subprime in global financial crisis. Worked out great. And the problem with shorting, though, is, you can short all the way down to when things get really, really close to bankruptcy. But then there's a risk. If they don't go bankrupt, they will squeeze back up. And I'll never forget, I was in Chase Coleman's office, and I walk in, he's in a pissy mood, and he literally tosses this report at me. He says, "Look at this." Like, what am I looking at? And this big, thick report, and he throws at me. And what is it? He says, Citigroup, our model. Citigroup is worthless. They have more liabilities than assets. This thing should be zero. Like, yep, you're right. But it just went from 1 to 5, right? It gone from 80 to 1 and then 1 to 5. So, you're getting your ass kicked, right? And he says, yeah. And I finally figured it out. It was inconvenient for too many people for Citi to go to zero. And that's it's inconvenient for too many people to say, hey, OpenAI, do you actually have any money to buy those AMD chips? You're burning $8 billion of cash this year, like torching it on fire. Oh, but our revenues are growing. Right. But every time someone uses ChatGPT, you lose money. You actually don't make money. You lose money every time they use it. And it's the old thing of Jeff Bezos. Oh, yeah, we lose money on every transaction, but we make it up on volume. Ha, ha, ha. That doesn't work. You have to find a way to make money. And Jeff did, obviously, and Amazon's a great business. But I don't see a world where they can find a way to make money, because the transformer model in and of itself, it's very inefficient in terms of power and demand for electricity. Maybe someone will figure out a way to do it more efficiently and effectively, but then that's bad for the incumbent, right? I mean, the person with the new model will get all the benefits. So I don't know. But it's inconvenient for too many people who have put lots of money into that business to say it isn't great.
You mentioned Citibank, and you and I have talked about JP Morgan a lot over the years and all the things that have been happening and manipulation and so forth. But Mark, they're all bending the knee. Vanguard capitulated. JP Morgan's doing tokenization. They partnered with Coinbase to launch crypto custody. Citibank's talking about custody and launching its own stablecoin. Are we seeing the full capitulation here?
Yes, but. So yes. So we're seeing graduated capitulation, and we're seeing the last stage of the then they fight you by trying to capitulate on stuff that doesn't really hurt them, but then tries to keep their monopoly alive. And what do I mean by that? So 2009 to 2016 is the first they ignore you phase. Nerds, geeks, magic internet money. You got to meet someone in the back alley and you get hit with a wrench and then you lose all your Bitcoin. So science project, not really interesting. Trade drugs with it, great. Okay. 17, or that's 2009 to 15, 16 to 21, then they laugh at you. Ah, bunch of nerds and geeks with your magic internet money. Yeah, whatever. Oh, it's cute. BlockFi has $10 billion, came out of JP Morgan. Cute. Wait a minute. Now you're 20 billion. Now we got a fucking problem. Okay. So, get the New Jersey regulators, shut them down. You go after Celsius. So get rid of competition. So 2017, I'm sorry, 2022 to I think 2027, then they fight you face. The first part of then they fight you, I mean, it was the smack in the face, put companies out of business, threaten lawsuits, and look, Brian Armstrong, God love the guy. I mean, he just fought. He said, "Come at me. Come at me. I'm doing this right. I'm the future. You're not." And he won. But now the problem is, in theory, JP Morgan should just say, "Yep, decentralized is better than centralized. No JP Morgan coin." Uh-uh. They want JP Morgan coin. They want a permission blockchain. They'll let you move money in their system using their blockchain, but they don't really want you on a public ledger.
Yeah.
So there's a little bit of capitulation. Now, Vanguard, that is true capitulation because that's, the guy said, "Over my dead body will we allow our clients." But that was a calculated risk, right? Their clients are all boomers, and boomers have all the money. Boomers don't like Bitcoin, right? All the young kids want to buy the ETFs. They're like, "Well, you don't have any money. So go knock yourself out on Robinhood. We don't care." So it was a branding thing to say, "Nope, we're not going to do this." And all the boomers are like, "Oh, yeah, see, I told you the Ponzi scheme." Well, then a few boomers were like, "Shit, my son's making a lot of money at this. My daughter's making a lot of money at this. I got to do this." So once the boomers started saying, "Yeah, we want this," they had to give in. So that's real. That's capitulation. But the bank capitulation to me is they're still trying to do an end around. They're still trying to say Bitcoin is bad. Bitcoin is evil. It's for terrorists and drug dealers. But we over here, it's life imitates art, right? And we say that there's all this predictive programming out there. And if you watch certain movies, then that happens in the future. The one that gets me was a movie, but it was a series called Mr. Robot.
Yeah.
And it's scary. Evil Corp in Mr. Robot is JP Morgan. I mean, they talked about Bitcoin. They talked about Evil Corp shutting it down with eCoin and Evil Coin. And it's interesting because that is playing out in real time. Now, at the end, we know the good news is we know how it ends, right? Is that then they fight you, then you win. So we know decentralized is going to win. We know that Bitcoin is better than fiat. We know that real money is better than fake money. But $7 trillion of revenue in banks, brokerage firms, insurance companies, accounting firms, auditors. Like, why do we need an auditor and pay them $700,000 a year to audit the books and records of the company if it's audited every 10 minutes on chain? Well, we don't. So the auditors are probably not very psyched about this business. Title. I have to pay $1,000 every time I do a real estate transaction for title search. Well, what if you do it once and then it's good forever? That's just it's a better business model. It means you're freeing up capital to do other more creative things. But I understand the title insurance. I have two buddies. They own a title insurance company and they're nice guys and they live a really comfortable life, but they don't want this to happen. I look at all of innovation the same way, right? When new technology comes along, it does a couple things. One, it solves the problem that people thought was intractable. Like I love all the charts now, like, electricity usage going like this, and we're going to use all the electricity in the world just for AI, and no one else is going to get any, and you're going to lose all your. I'm like, no, you're not. There is zero chance that we're, as a society, going to say, yeah, it's okay. We're going to use all the electricity for this stupid thing so I can ask ChatGPT, a silly question every morning. I mean, we're just not going to do that. And so it's just like when everyone's saying we're going to use all electricity in the world to mine Bitcoin. No, we're not. I mean, that's a silly thing. What's going to happen is people are going to invent more efficient ASICs, right? They're going to invent, workarounds like DeepSeek. DeepSeek doesn't use as much electricity because they use software to make some of the hardware things unnecessary, so they don't need the power hungry hardware. The fact that innovation always follows this cycle, and whenever there's a new innovation, like cars, when cars came, they said, "Oh my God, we're going to run out of oil."
Yeah.
No, we haven't. We haven't even come close, and oil prices in real terms are actually really low, right, comparatively. So we get more efficient. And I remember telling the story, 15 years ago, that there was more oil in the US than Saudi Arabia. People are like, "That's ridiculous." I'm like, well, it's actually true. It's underneath Colorado and Wyoming and Texas. And the problem is it's in the shale. And the only way at the time back then, the only way to get it, this is crazy, you literally drilled a mile down, and then you inserted a tungsten steel rod, and then you heated it up to like 700 degrees or something, and you melted the shale, and then hydrocarbons would bubble up. Like, that just sounds expensive, right? And so if that was the only way to get it out, we probably wouldn't have got it out. But somebody said, "Well, what if we fire sand down there with pressure and we'll break the rock?" And again, if you told me you were going to do that, I would say, "No, you're not. That's ridiculous." But it works, and it's cheaper. Now we have cheap oil, and we produce more oil than anybody in the world. So innovation and human creativity, this back to Jimmy Song. If we have more time to think and less time to just do what we're told to do, if we don't have to, be in the monopoly that is the incumbents, well, yeah, life will get better, and it will. So anyway.
Before you go, I want to ask you about digital asset treasury companies because, Mark, it feels like a bubble's forming here. It started with Bitcoin, but now they're expanding to Ethereum, Solana, and other assets. What are your thoughts? Are some of these companies going to survive the bear market?
Oh, for sure they won't. And it just depends on a bunch of things. It depends on balance sheet management, right? If you're overly indebted, it's going to be a problem. Now it does depend on how deep the bear market is. I said if we don't go up super high and we don't go super low, there'll be more wiggle room. Bitcoin or a digital asset treasury company. Why would I pay a premium for a wrapper to hold an asset that I can hold myself?
Yeah.
I wouldn't. Now, maybe you could say, well, security. They have better security. Okay, fine. I'll pay a 2% premium, 5% premium. Maybe. That does make sense to me. Okay, how about ease of transaction, right? It's easier to do a transaction with an ETF than it is with, that's a spurious argument. But let's say security, I'll take that one. Okay, then the only other reason would be, well, if they can issue debt at a really low rate and buy more of the asset, there's an arbitrage. And Saylor has done this famously on CNBC saying, look, if you'll lend me money for zero and I can buy Bitcoin, that just accretes to shareholders. And then I'll get an MNAV above 1. Well, if people pay me a premium and I can issue new shares at 1.2 and buy an asset at 1, then I have a flywheel. But the problem is, if your MNAV is 1 or lower, no flywheel. And so I think in the Bitcoin space, there's going to be a small number of winners. And I do think, MicroStrategy is one. I think Metaplanet is one. So I do think there's going to be definitely a few winners. In the other assets, I struggle because Bitcoin to me is like gold. Like if you did this with gold, it makes sense to me. If you did it with, shares of a company that did internet security, it's kind of like how I view a smart contract. I mean, a smart contract, it's fine. But if I can issue more of that token, I don't know. That's more like fiat. So,
Hmm.
um,
So, do you think, though, to your point of the issuing of more tokens, but what about like the staking, the yield component, which
Staking, that's a great point. So, certainly cash flow generation starts to make it look more like a business, and so I do think there's some logic there, and so you have to balance the two. But it's a very important point, Tony. If you can generate yield on your asset, that accretes to shareholders, and you should get a premium for that. I guess the question is, at what point do they equilibrate, meaning the dilution of the new shares relative to the production of the yield, is equal? Or maybe, the protocol says, we're going to burn. We are going to reduce supply. We're not going to grow supply infinitely. But, places where there's no guarantee on the supply of the asset, I just don't. To me, the bottom line, digital asset treasuries need to focus on scarce assets.
mm, that makes sense. Um, Mark, final thing before I let you go. I wish we had another hour, but do you
We'll do it again.
anticipate what's that?
We'll do it again.
Yeah, yeah. Do you anticipate the Clarity Act gets passed, the market structure, and that's a huge narrative. SEC approves additional altcoin ETFs. We lead to this blow off top come November, December, and that's it. Wrap it up.
So it should have gotten approved. I actually don't know. Well, I do know, right? The incumbents got in there, and the bank said we don't want this, and so Ms. Warren, and her cronies, I guess, got it stopped. But I don't know that there's enough. Like, it was important for the president and the administration to get the Genius Act passed
Mm,
because, you know, money, and the, Commerce Secretary owns 5% of Tether, and, so all of that, I get it. Goldman knows how to lobby it, and Jeremy's ex-Goldman, so, I get that one. The other one, I just think, like, you're dancing too close to the incumbents, and they just don't like it. But if it were to get passed, I think exactly as you described would happen. We could finally get the alt season that doesn't seem to be coming. It's funny. Scott Melker, who's a buddy, tweeted yesterday, says, "Yeah, forget alt season. I made more money on Iran than all my altcoins. So I'm just going to trade stocks," which is kind of funny.
yeah,
So Bitcoin dominance and stablecoin dominance are totally logical, right? Stablecoins as payment rails to replace, Visa, MasterCard, whatever, Venmo, PayPal, that makes perfect sense. Bitcoin as digital gold makes perfect sense. All the other use cases, I can see them and I can make an argument why they could work, but they're fighting up against incumbents that have a lot to lose.
sure.
Whereas gold, there's really no one. I mean, I guess the gold miners have stuff to lose, but they're not big enough to matter. So they can't really fight against Bitcoin becoming digital gold. They're just not going to do it. But the banks can still fight. So we'll see how that goes. But I think it is a good point, and I'm not the extreme. There's Bitcoin and everything else. It's a scam. I don't believe that. I do think, Ethereum, Solana, Avalanche, smart contracts, I think, have a role in the future. I really do, and I think they're good. And Sui is an interesting protocol, and I keep hoping Chainlink does what they tell me they're going to do, and their army is like, you're missing that. Look, I would love there to be interoperability, but
You got a
so
lot of
far,
armies who are angry at you, Link and XRP. So get
well,
ready.
look, I'm never going to come around to XRP. I'm just not. So, Army, you can hate me. It's okay. I'm just never going to come around because, look, I've been doing this a long time, and I've met with more than 1,000 groups building companies. We've invested in 100 of them, so we probably met with a couple thousand. I've never met one building on either XRP or Cardano. That's impossible, right? It's just impossible. I mean, now people will at me and say, "No, we're building on." I'm like, "Okay, then come see me." No one's ever come see me. I've met with hundreds of people building on ETH. I've met with hundreds of people building on Bitcoin. I've met with hundreds of people building on Avalanche. I've met with hundreds of people building on Solana. I've never met anybody building on those two protocols. So to me, I'm just being logical,
Well,
but I know it makes people angry.
yeah, they're gonna come after you with the pitchforks, but, it is what it is.
Well,
Mark.
and look, it doesn't matter what I think. If this is a real protocol and they're really going to replace Swift, Godspeed. But we don't want to replace Swift. We don't need another Swift. We don't need a better Swift. We need to obliterate Swift, and we need a new protocol. We need a new system based on decentralization, not centralization. So if you can do that, love it. I don't think you can do that, but prove me wrong.
Mark, if you can make me a promise, Bitcoin hits, at least over 150K, maybe 170. We got to do it in person in New York in my studio
Oh,
later
easy.
this fall.
Absolutely. Absolutely. It just didn't work. I mean, I'm going to be there on Monday, but it just didn't work out.
Yeah.
So, absolutely. We'll make that happen in person.
Awesome, Mark. Thank you so much. Always appreciate your insights.
All right. Good to see you.